Welcome to Learning Insights by AllCloud. This is our platform where we are reeling our thoughts on the lending industry. And today is a very special podcast, a full house, of course, in collaboration with IDfy. We have our three distinguished guests who will be throwing a lot of nuggets of knowledge, light on the MSME sector, the MSME lending sector in toto. So now guys, let's dive into it. I would like to introduce our guest today. We've got Wriju, Chief Business Officer, IDfy. We've got Ajit Menon, Group Head Operations of Viriti Capital. And we've got Sounak from TransUnion SSPL. So quite a full house, a very diverse, a very diverse forum here that will be discussing various aspects of MSME lending. Just coming to Sounak on this one, because that data which is not very visible on the documents and core, I think that's where your expertise is as well, to uncover those data points that could red flag a lender's risk assessment. So what's your view on this? I mean, are we good? Do we have those many data sets today, or still there is a lot of data enrichment required for the MSMEs to actually become more lendable?
Yeah, I think so. The first thing is, of course, for MSMEs, it's not a one-size-fits-all because it's a very large gamut. Now, for the thick-to-bureau population, as we call it, right, people who have existing credit exposure, you have robust credit data which is already available to a large extent. The good news is that for the micro segment, which is smaller firms which have less than 1 crore of total exposure, loan outstanding, for that segment already a bulk of new sourcing, 50-60% of new sourcing is actually new to credit, which means lenders are having that comfort increasingly to even go to that new to credit segment by leveraging some of the alternate data sources he mentioned. And in a way, when you think of the MSME opportunity, it's like a dichotomy. You have a big pool of customers who are credit underserved. Yes. 70-80 million MSMEs, 110, 120 million people employed by MSMEs, 30% of the GDP coming from SMEs. At the same time, the pool of MSME loans as a percentage of total is around 20%, much lower than corporate and consumer.
Huge credit gap there.
So one is the credit gap itself. Second, the customer experience when they're availing credit. On the retail side, a bulk of loans are approved and disbursed within 5 days. On the MSME side, it's the other way around. It actually runs into weeks, not days. So about 60% of loans take over 10 days to disburse, right?
So that's the point. I'm sorry, Sean. So I think that's exactly the point that we're trying to solve as well, right? So the philosophy that we have is to retailize institutional credit.
Okay.
Yeah. So if it takes you, so I think we've crunched our time from assessment, from origination to disbursement. If it took 45 days 5 years ago, today it takes 10 years.
Yeah, and just adding on to that, so I come from mostly a consumer lending kind of a background, but one of the things that drew me to MSME lending is this plethora of data which is available in the ecosystem and the bunch of things we can do on cash flow lending, right? Be it payments data, GST data, banking data, bank statement data, some of the ecosystem data we have around fraud and ID verification, right? Which can give that seamless digital onboarding experience to our customers. That's what we really kicked about.
Basically, if the cash flow data is solid, the GST data is solid, but there is some criminal tone to the borrower or the business, or there has been some links that the lender is not really able to understand from those documents, is something that you could add on. Again, it becomes a layer upon a layer, and then you analyze it in toto.
Correct.
Yes, absolutely.
Yeah, and I think that's the only way you can crunch those timelines is not to have. You can't do this in the old-fashioned, the brick-and-mortar way. You've got to digitize processes which will essentially give you the data. What took you 5 days should not exceed. I'll give you an example. Won't take the name of the company. There are many bank statement analyzing companies today, right? So if, let's say, circa 2005, if you had to analyze a bank statement for 5 years, it would take you 2 people over 7 days to analyze it. And then, come up with the models and, plug those numbers into an Excel sheet or, convert the bank statement to an Excel sheet or re-verify. And then run your proprietary model on top of it and then, figure out. Today I can, pass a bank statement which is 5 years old, a current account. And I could get it in, let's say, if not 10 minutes, I can maybe get an output in 15 minutes.
Correct.
So I've crunched
that 10 minutes.
7-day gap into 15 minutes. It comes at a price, but that's actually increasing my time to market, reducing my time to market, my bad. So that's exactly what technology is today trying to. So if you have to retailize, institutionalize institutional credit, and it's a big problem to solve, and that we've almost solved it, because it's an average time of 10 days today, and we plan to take it up further with our own institutional LOS and institutional LMS and a proprietary algorithm which helps us underwrite faster.
I think that's the major problem with MSMEs as well, because they are in a need of credit today, and the lenders take about, say, 10 days. They would want to have access to that fund. They go to the unorganized channel, and that's the cycle that they can't break out of, because they have to service that debt. They can't come to the organized cycle, and that is one loop that
So I'll give an example.
all of us have to.
Absolutely right. So rollovers, right, generally take time. So rollovers should happen fast. So for example, I have a payment coming up, and I would want to make that payment on the 25th, but I have salaries due on the 26th. So I would want to roll over that money. I would want to repay on 25th. Yeah. But I need to redraw again on 26th because I've got to pay salaries of my employees. If I don't get that money on the 26th, I'll miss payroll. Now, are banks solving for it? Maybe they are, maybe they are not. But am I solving for it? I am. Our rollovers happen in 30 minutes. 30.
I'd like to add to some of the stuff you mentioned here, from the perspective of how things have changed. It was in the good old days when it took much longer than 10 days. There was a lot of friction in terms of how documents were exchanged, and I think that's been a paradigm change. Really, first is how you can fetch or pull information just by the mere PAN number, if you have a GST number or something. And so, more and more data sources are not just linked to companies. Like MCA listed entities are probably a small fraction of the MSME population.
Yes.
And then after that, the other types of entities you get in, you still have GST data, etc., that comes up so easily, right? And even if you don't have that, merely the person involved, the proprietor, their PAN number, etc., starts giving you a wealth of information, and how it's become easy now to simply use these identifiers to fetch information. And
one identifier, how it starts is, I've seen use cases where you start with the mobile number and you end up with the entire profile of the borrower. You start with the PAN number, you can go to the GST, and you can also go into the Udyam number and get all the data in one place. So just remembering those days when banks used to insist on color xeroxes or color copies of your ID proof to make sure that you had the original with you, and the clarity is there.
Bank can get it stamped, saying it's a.
But now you give a number, and then your journey starts.
The regulation, again, this is not necessarily a kosher discussion. The regulator still wants you to have copies of Aadhaar, and which is OSV'd and masked and signed. Right. I think it's just about time where I technically do not need a physical copy of, Wriju's Aadhaar card. I just need the Aadhaar number. I can get an XML notification through OTP, and I have a report which says this Aadhaar is verified. There are medical user guidelines which the regulator has phenomenally promoted, and that's worked very well in the retail segment. Today, I can use DigiLocker to do his KYC in under a minute. I can pull all his credentials, provided he has a DigiLocker through an OTP. I can pull including his mark sheets, to his driving license, to his Aadhaar, to his PAN, everything. So
that fetch of it, I thought, is an important step forward. If I can just take that a level forward, and although I know it's not completely adopted, the account aggregator as a framework, it's a beautiful mechanism, especially if you see the user experience around it. Like, you can get this MSME proprietor, for example, to accept or give consent, and then as an FIU, the information that you obtain from it is already trustworthy, because it's not coming from him, it's actually coming from the different sources. Yes, of course, you'll have data coming from multiple banks, because mostly they'll have bank accounts in different places and all. Once you mesh it all together with the algorithms you've created, the information now starts giving you a true picture of what's happening. And furthermore, if you think about it, data sources like GST is not just about the GST number itself. It's actually also about the invoices you've paid, right? And so now you can track who are their common suppliers, right? Also who are their clients.
And if you start looking at the bank statement and all these two together, you start forming a very nice picture. Right. What is their concentration risk here or there? and exactly what their cash flow situations look like based on it.
And how they've moved.
Yeah, it's beautiful how the government has been able to create this kind of a system that if you want to, you could start leveraging without even like asking for any information. Simply consent. That's it.
Consent. And making it easier for the borrower. So the the picture again going back to there was you submit a lot of documents.
Yeah.
And then you don't have one document, the entire process is stored.
Correct.
But with so many data sources available today, you can have parallel processes.
Yeah.
And the core systems have become also very robust that you can have parallel tasks happening. You can give a pre-sanction, you give a conditional sanction, and you can say, okay, after this, then I'm going to be disbursing.
That's because your services are microservices.
Yes.
They're all microservice architecture. Versus monolith, which happened. Not that monolith has its advantages, microservices has its advantages and disadvantages. So it works both ways, but it's just as you rightly said, a lot of these things can happen in sequence. It can happen in parallel, which just bumps up the efficiency. So you have higher leverage.
And what this kind of data infrastructure really promotes is, one is through the account aggregator, you have access to my bank statement and my GST. Second is I have new use cases like a invoice financing or a purchase order financing and a GEM Sahaya, GST Sahaya. These are examples of it. Now for a bank now, that risk comes down significantly if I'm able to establish that one, that invoice is genuine. It's coming to me from a genuine source. Second, there is no duplicate financing on that invoice, right? So if that platform, if that window can give me that assurance, and if banks, the ecosystem also contribute by reporting that information more frequently, then actually have solved for a big problem on the ground.
I think trust is solved for.
I'd like to actually add a little bit on the trust factor. So one of the unique challenges that you come across in this segment is that an entity is composed of people, right? But directors can easily keep moving around. You see, it's like a very common thing to do. Today, your brand or company didn't work, you start another one with different brand, right? And then suddenly you act as if a very completely different entity, but the people are still the same, right? And you work with complete impunity. You're like, you have no consequences to it, right? So there is an important step here to realize, which is that the entity and the people both need to be analyzed, right? And the directors here, maybe directors elsewhere, and to tie them down in terms of fraud is extremely important. And it becomes doubly critical now. It's not like you have the bureau per se. I know there's a lot of steps that TransUnion has taken in creating a fit rank, etc. It's a genuinely appreciated step and it's going to change in the right direction. I feel that it actually begins with some core information about the directors, about the company that you can get from sources like criminal records. It actually tells you data about their defaults, about their check bounce, about who is suing them, about their willingness to pay from that. You can infer a lot of things about it.
And how they're handling it as well.
Exactly.
How they handle it.
Yeah.
Whether they're responding on time or not. Because if you are going to be, just in case you are in that position that you need to understand how is the response time of the borrower as well, right? And I was just putting one more thought to what you said, right? There is always an intent fraud, right? You can't beat that, because if the borrower is going to be intending to default, then that's technology can't solve for that. Relationships could, but if the same director or you said the individual moves to different companies, the intent to default also moves along with that.
Precisely, yeah.
I think a lot of proxies and data can actually point to the fact that there could be a potential. It's like Tesla identifying an accident before it could actually happen.
Well put.
Yeah, it does.
It
Right?
does.
I mean, there was a
It's called sleep, right?
Yeah, no. There was a Tesla which was actually on a freeway, and it actually detected. And this was actually a case. So it actually detected. It predicted that there is an accident, but the accident happened exactly 30 seconds later.
Wow, that's freakish.
Yeah, that's freakish. That's because there are so many algorithms at play, which could actually go check the speed of the vehicles, 10 vehicles ahead of you. Suddenly there is a brake speed in the vehicle, which is the first in rank, and there is an abrupt breakage. So then it detected it can't be anything but an accident, and it says there is an accident and it braked.
It's almost like you can tell you're going to default now.
Absolutely. So I think you're getting there. You're getting there because that's how card companies have always worked. It's just that these algorithms are becoming, with reinforced learning, it's becoming more stronger, and it can predict with a lot of these learning models. It can predict with far greater accuracy than what it would do 5 years ago.
I'm sure it's not going to, you're going to default. It's going to be what steps am I going to take to make sure that the customer is
Scale down, reduce your risk, exposure, etc. A lot of tertiary factors, a lot of proxies today enable you to, it may not point out and say that it will happen on this date, this time, like the Tesla did, but it will be
Like the good old days, no, they would say, "I look you in the eye, I know if you're a fraudster or not."
If you see people who are
I mean,
from
the
the-
American intelligence, CIA and FBS will do it, right? Because there are cues that you give out.
And you will not believe how many NBFCs I've come across. Have I alienated people yet? So I feel that there is a certain tendency to do that, which are great. I mean, I'm sure you've got experience in doing that. But I do feel that informed intuition is needed. You may know them by looking at the color of their eyes, but you need to, also look at the data because,
it's only
It's corroborate. I mean, you could have the intention, but you may not have the ability to pay. You could have the ability, but may not have the intention to pay.
Interesting. So on the credit side, actually, we have had these kind of algorithms for some time now, a few years now,
Yeah.
which looks at trended data and it does a very good job of predicting whether you're about to go over or not, even before your score has actually come down.
Absolutely.
But what is interesting is even on the fraud side, the point you're making, things like say a device risk, right? How are you actually behaving how is your behavior on that device?
Absolutely.
What's the risk of that browser you're using? What's the risk of that device you're using? These are things which are coming into play increasingly with use cases potentially both for lending on financial services, also for e-commerce, right? We're seeing a lot of checkout fraud as well.